What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is BBBY, Bed Bath & Beyond. This finishes at $9.79 today. That is down 14.2%.
And it's gone.
And if you guys haven't been paying attention to the market lately, in the past week, a bunch of stocks have been squeezing, specifically meme stocks and low float stocks. Bed Bath & Beyond is one of the OG meme stocks. So we did analyze the stock yesterday. If you guys recall, I did say that I was very happy for the apes, but it's starting to look very dangerous, and the squeeze was probably going to end pretty soon. So the stock did make StockTwits top 10, had over 6,000 mentions today. So once again, we're going to analyze it. So no company-specific news to justify this price action today. This just seems like some healthy pullback, because this was squeezing pretty hard, all the way from the $4 range into the $13 range. So not really surprised. This was expected. Let's go ahead. Let's jump right in and analyze here. So first of all, this is a cup and handle in the making. Bottom of the cup being the low of 440, and there can be multiple possible tops. It can be 1420, 1490, 1750, 1965, 2160, 2310, or even 2855. And longer term, this is part of an even bigger cup and handle, where this has the potential to go all the way back up to 5390. Although I do believe the most realistic tops would be 1420 or 1490. But those are all bullish indicators that is telling us that the stock should come back up to one of those tops to complete the cup. Here we have a bull flag in the making. No confirmation just yet, but here's the flag pole. So all we would need is some pullback to form the flag, which we're getting now. And that would be a bullish indicator that is suggesting that this stock may break out to the upside. In the aftermarket here, this is running up to 1015. So if this aftermarket action holds, that would be a bullish indicator for tomorrow. That is suggesting that tomorrow, this stock will run to the upside. And then we do have a double gap up. First gap up was back at 830, so that's a bearish indicator. That is telling us that the stock should come back down to 830 to fill that gap. And the second gap up was back at 650. So another bearish indicator that is telling us that the stock should come back down to 650 to fill this gap. And those two gaps should fill in the short term. And finally, we have an ascending channel here. So right now, the upper channel is at 970 and the lower channel is at 735. So if this breaks 970, that would be bullish. And if this breaks 735, that would be bearish. So this did in fact break 970, and it is still above 970. So the ascending channel is currently a bullish indicator, although it will probably go back to a neutral indicator or a bearish indicator pretty soon. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is trading between the sideways channel, the rectangle of 1015 and 965. So if this goes to the upside, next levels of resistance would be 1015, 1055, 1090, 1125, $12, 1260, 1295, 1340, 1380, 1420, 1450, 1490, 1530, 1565, 1620, 1665, 1710, 1750, 1805, 1855, 1890, 1930, 1965, and then 2015. There is resistance above 2015, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 965, 920, 885, 855, 815, 795, 750, 715, 695, 665, 640, 610, 585, 550, $5, 475, and then the low of 440. So right now at the current price, 979, the channels to the upside and the downside are very wide, so expect significant price action either way this goes. RSI is currently at 68, so no longer in overbought and overvalued territory, but still pretty high up there. So still dangerous. Be careful, guys. According to the RSI, the current price of 979 should be a lot lower. And this did 74 million in volume today. Very significant volume. This would be the fourth biggest volume day of the year, way above the average of 8 million. So the sell-off today was confirmed by the volume. And it does appear like the squeeze is winding down and coming to an end. Okay, guys, just my opinion, not financial advice. We have 4 bullish indicators in the cup and handle, bull flag, ascending channel, and aftermarket action. And we only have 2 bearish indicators in the double gap up and the RSI. So long term, the stock still looks really bullish, but in the short term, this still looks like it's due for some very significant pullback. Not done selling off just yet. So therefore, if you want to go long, not financial advice, I would not do that, and I would not recommend that. Like I said, it appears like the squeeze is winding down, coming to an end, quickly losing momentum, and going long here would pretty much be FOMO at this point. It's a falling knife, and you're probably going to get burned. 979 is a pretty bad entry, according to the RSI. So again, in the short term, this has the potential to come back up to 1420 to complete the cup there. And from the current price of $9.79, that would be about a 45% upside potential. So pretty decent upside potential there. But it is pretty unlikely that this does come back up to $14.20. And again, in the short term, this should come back down to $6.50 to fill the gap there. And from the current price of $9.79, that would be about a 35% downside potential. So there's also some pretty decent downside potential here in the short term. So I would say going long at the current price, $9.79, would be a high risk, high reward play. Not really worth it in my opinion. If you want to go long, please do that at your own risk. It would definitely have to be for a quick scalp. Get in, get your money, and get out. So $9.79 isn't the greatest entry. And honestly, if you're a bit patient here, you should be able to get this back at $6.50 where the gap is. And I think that would be a much better entry than $9.79. So at $6.50, there's massive upside potential in the longer term and really shouldn't go too much further to the downside. There's some very critical support at $6.50. Going to take a lot of selling pressure to break that. And it is near the all-time low. So you really can't go too wrong buying in at $6.50. So I don't like the current entry of $9.79, but I can support going long at $6.50. And if it pulls back, then you can just average down at the supports that I mentioned before. Now, if you want to go short, not financial advice, you already missed a lot of downside today, but there still appears to be a lot more downside to go. So it's not too late. $9.79 is still an above average entry on the short side. So again, in the short term, this has the potential to come back up to $14.20, although pretty unlikely, but this is technically still squeezing, so anything can happen. And again, this should come back down to $6.50 to fill the gap there, which would be about a 35% downside potential. So I would say going short here would be a medium risk, high reward play. I say medium risk because, again, this is still short squeezing. Ape's still in here, so anything can happen, although unlikely. And I say high reward play because, again, this has a 35% downside potential. So as long as you're able to withstand some upside pressure here, you should be able to make some pretty fat gains here on the downside. So I can support going short at the current price, $9.79 and higher. And again, I would cover at $6.50 where the gap is for a relatively easy 35% downside gain. So pretty straightforward, guys. It's been a really rough 2 years for this stock. Ever since the initial GME squeeze happened, pulled back very significantly from the 50s all the way down to below $5, hit the all-time low, and then they started short squeezing, went all the way from the $4 range to the $13 range, but now it appears like the squeeze is losing momentum, winding down, and coming to an end. So the stock still looks bullish in the longer term, but in the short term, this looks like it's due for some pretty significant pullback. So if you want to go long, seems like a pretty bad idea right now. You're probably going to get burned. Again, looks like the squeeze is coming to an end. This is a falling knife right now. So the current price of $9.79 is not a good entry, according to the RSI. If you're a bit patient, you should be able to get this back at $6.50 where the gap is. And I think that would be a much better entry than $9.79. So I don't like the current entry of $9.79, but I can support going long at $6.50. And if it pulls back, then you can just average down at the supports that I mentioned before. And if you want to go short, looks like a pretty good play right now. You already missed a lot of downside today, but still a lot of downside to go. There is still some risk involved because, again, this is still short squeezing. The apes are still in here, so anything can happen. Just pretty unlikely. So as long as you're able to withstand some upside pressure here, you should be able to make about 35% to the downside relatively easily. So I can support going short at the current price, $9.79 and higher. And again, I would cover at $6.50 where the gap is. So sorry to everyone who lost money in the stock today. Consider taking profits if you're still up. Not financial advice. And good luck to everyone currently in the stock and to everyone looking to take a position. This is BBBY, Bed Bath & Beyond. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See ya guys tomorrow. Peace out.